All right, so we're going to talk about it. Yes, we're going to have to talk about it. The real estate crash prediction by Robert Kiyosaki, the author of Rich Dad, Poor Dad. So let's go ahead and jump right into it on how to prepare for this once it does happen, or we may actually already be in it. So stay tuned, because most of these reasons I'm sure you have not heard of before. So I don't know if it's just me, but it seems for the longest time, maybe even decades, that Robert Kiyosaki has said we're due for an upcoming crash. So at some point he is going to be right. But one thing I do want to comment when it comes to this is not all doom and gloom. I'm more of an optimistic person and hoping for the best, but at the same time preparing for the worst. And Ray Dalio talks about this, is that everything is in cycles. Whatever sector it is, whatever investment, us as humans is also cycles. And over the years since the crash we had in 2008, 2009, is we've been in a super cycle. So everything pretty much has been going up like this. And from that is at some point it's gotta go down. And through this super cycle, as most investors, including myself, is like Steph Curry shooting from the three-point line. So shooting and can't miss. And by that is buying a property, and either way is you're going to make money from it. And I'll just give you a prime example, is that the properties that I have sold over the years, I have no way in heck how those buyers are making it work on the other end. And then also I remember attending this real estate conference, that there was a investor up there that owned quite a bit of apartments, and I believe they mentioned they had bought it for 40 million, 45 million or so, and then just several years later they were selling it for about 60, 65, somewhere around those numbers. But someone asked them, is that okay, what did you do to the property to justify that? They said absolutely really nothing. And that's what I mean, is a prime example is being able to shoot and not miss, because the demand is still there and people are still paying top dollar for it. But then there's the question, how sustainable is that? I guess we'll have to find out whether or not those deals end up cycling back. And when being ready is having the dry powder available, because when those are fearful out there, that's the best time to be greedy. And when those are greedy, which is the time that we're currently in, that's the time to be fearful. And myself have been selling over the years to have that capital available for once prices do start to soften. And this is what Robert Kiyosaki actually states, is 2008 was a great time to get rich. Everything went on sale and borrowed millions of dollars buying real estate bargains. And also one thing that does play into your favor during this time is that the Fed, their main priority, and this is what Jerome Powell came out and said, is to combat and get inflation down closer to 2%, which we've got a long ways to go from that. And what they're going to end up doing from that is raising interest rates. And by raising the interest rate is inversely, that does affect what people can pay, what buyers can pay for prices. So that's going to cause prices to actually start to come down. And then it will shift more to a buyer's market versus right now it is a seller's market. So that's just my personal opinion when it comes to this. I do not have a crystal ball. I'm just putting on my Sterling O'Dama's hat for the time being and just sharing my personal experience as I see things unfolding. And also to prepare is you want to have your strategy in place, and so you can go out and actually execute on it. And I mean, not like execute someone, but I mean like execute on that actual strategy that you do have, and determining what is a good deal versus a bad deal. So you want to have the fundamentals on being able to underwrite. What is your criteria? What type of properties that you're going to buy versus taking the shotgun approach or taking more of the sniper approach, saying that, okay, I'm going to buy C-class properties that are between, let's say, 5 to 20 units that are built, let's say 1970. So that's a prime example in taking more of the sniper approach. And then also included is having your relationships already established, whether that's agents that are starting to send you over deals. That way is once you're able to hit the ground running, you already have your foundation set, and then also your team. is who are the people that are going to be on your team. Are you bringing on a equity partner? Who are going to be your investors if you're not going to be using your own cash? That way is you can now move with speed and be ahead of the curve of the people that were not prepared with a strategy. And this one is just some general knowledge for you to have. And I got to take a dose of my own medicine when it comes to this point, is that timing the market is virtually impossible. And what's important is your time in the actual market, because as things do start to go down, is through human nature, you're just going to believe that it's going to keep going down. Or even when it does hit a low, there's going to be so much negativity and FUD, so bad news that's on it that you may not even want to touch. And I'll just give you a prime example. And this is just understanding human nature and psychology. Is when it came to Bitcoin, the all-time high that was 69,000 per Bitcoin. And many people at that time said, I'm not going to buy it. It's too high. I'll get it when it goes lower. And just as of recent, is it got all the way as low as 17,000. People are thinking now that there's no way I'm going to buy that, because there's a lot of fear associated with it, or they actually believe that it's going to go even lower. So that's what I mean as an example when it comes to that when others are fearful, that's the best time to be greedy. And this is not financial advice, even though somewhat it sounds like a financial advice. You're thinking, oh, you're a hypocrite because I know what you're getting, but you get where I'm going to get. So that's all I have for you all. I appreciate you all so much. If you've gotten value from this, go ahead and like and subscribe to content. And if you made it all the way into the end, if you can comment below, go ahead and put MacBook. I'll talk to you soon. Oh, also is, if you haven't already, schedule a strategy session where it'll be on hopping on a call, just determine where you're currently at, where you want to go, and to help you be able to bridge the gap to get there. Link below. Thank you.